So today was even more red than yesterday. It's not the worst red day I've experienced, but the market's going down. And as you can see, when most of the market is going down, consumer defensive and healthcare are going up. Those are the two most green sectors within the S&P 500 today. But with most of the stocks going down, we did not have a lot of buy triggers that hit today. Since I started remaking these videos recently, today is the most sell triggers that have been hit. So we're just going to get right into selling some stocks. All right. So taking a look at the S&P 500 through the SPY index, we can see that this is a pretty large gap, and the gap is from today's open to yesterday's close or previous day's close. See, this is the largest gap that we have had on the gap down since May the 5th. And that gap is from opening at 625 to closing at 632. We have a $7 gap. Now there are bigger gaps, but each one of those larger gaps were on the open. So for example, here we closed at 563 and opened the next day at 581, which is an $18 gap. Now, I've been doing this for a while, so these downturns don't affect me like they used to. But if you are new to trading and you've got a trading account, or you started looking at your 401k, a move like today and yesterday can be a little alarming, because when you actually see your money or the value of your portfolio just dropping and there's really nothing you can do about it but sit and wait, it can be frustrating. It can be scary just to see how many thousands of dollars can just be disappearing right before your very eye. Now, using technical analysis, we would take a look at the price action, and we would try to determine how far the price can fall before it slows or stops to take a turnaround. And the way we would do that, we would go back in time until we find an area in which there were significant bounces off of a particular price point. So for example, here we have some consolidation right around the $623 level. But as you can see, we're currently sitting at 620. So we're already past this support area. So we'll go back in time down this increase here in price, and we find another area right around the $600 level. So what we'll do is we will add a line. We're going to add a drawing, we're going to add a line, and we're going to go from this level here, and we're going to put that there. Now I placed it at the low of these two candles, but in actuality, if we were to draw a box, add a drawing, and we add a box from this whole zone here, place that there, this entire zone, beginning at price level 605 down to 592, is possibly the most likely zone in which this price, if it does continue to fall, will eventually stop to turn around and bounce back up and see an increase in price action. So we'll just keep an eye on this every day over time, and if this zone ends up being a level of support and price turns around, then we will be buying right back in. So the first stock we want to look at today is Arista Networks, which is ANET. We'll come down here. So with an ANET, with Arista Networks, I'm maxed out with 16 shares. So I purchased those in blocks of 4. And my least price that I purchased right here is I purchased 8 at $99.15. And we currently have 8 other shares that we purchased before the stock market fell in February, which began to fall in February after Trump announced the tariffs. And those are $128 and $132. Now the trigger was activated because we had price fall below our fast moving average. But I am going to make the decision not to sell, because just because we have a cross doesn't mean that price will continue down over the weekend. It may actually turn around today and start going back up. So I always wait for a confirmation, which occurs the day after, which in this case it would be Monday. So we'll take a look at Arista Networks on Monday and determine whether or not we're selling or holding strong. Okay, the next stock is Keysight Technologies, which is Keys. So I'll go ahead and pull this up. Now this one, I know that the price is already lower than our purchase price, so this one all I would do is set a sell order. But because price is falling today, we're having quite a few alerts, sell alerts being activated. And we've got 10 sells that we're more than likely going to make, and I would rather show you my decision-making process on that as opposed to taking time in the video and just showing sell orders and my process for that. If you're interested and you don't know how to set up a sell order, you can go and look at a previous video. However, those stocks will be listed in the sell list that we put up after we make our trades. So you'll have a complete list of the trades that we made and the trades that I put sell orders on. So our next stock would have been Eli Lilly, but we're going to Meta because I'm pretty sure we're going to be selling a Meta. Now, when earnings was released, I only had 2 shares of Meta. So while it was rising, I waited for an opportunity for price to fall back down after hours on 2 days ago on the 30th. And I took advantage of that opportunity and bought 1 more share so I can have at least 1 more share to catch the run up. But unfortunately, we have price moving right back down. But in the long term, Meta is just going to keep hitting it out of the park week after week, month after month, and year after year over the next several years. They're probably going to be one of the biggest winners in being able to capitalize and monetize AI. Now, I do have 2 shares that we purchased that we would, if we were to sell, we would be selling at a profit. And one is at 737, one's at 727. However, I use the averages as my sell triggers or my buy triggers. It's a rule that I've set in place, and I put it there for a reason. It's quite possible that if I were to sell one of these on Monday morning, or even possibly later today, price just turns right back around and heads back up. If we look back at the chart here and we see some candle movement, we can see price action is significantly away from our fast moving average, and it will fall or drop back down to our fast moving average, just like it here. We see a decline in price, and sometimes that is what we use for support, or traders will use for support and bounce off, or it'll just hover around that until it drops back down to the slow moving average, and sometimes that's support. And since I'm more of a long-term investor, I have no problem if price continues to fall for the next day, week, or even a month. Meta's going to be profitable in the long run. Right now, I am not a strict hardcore day trader. I am learning to be a better day trader, but at this point, I'm just a swing trader. That's what I would classify myself as, with a dabbling in day trading. So since we're not selling anything, and that's one of my day trading stocks that just sold. So the next we're going to look at is the QQQ. And with the QQQ, this is an ETF that follows the NASDAQ, which is mostly tech stocks. So what we're going to do, we have price did trigger yesterday. We do have a continuation today, so I am going to sell 1 share of our QQQ. I'm currently maxed out with the 4 shares. I buy these in blocks of 1. So I currently have these 2 shares that I purchased on June 23rd, and I have 2 other shares that I purchased, again, before the tariffs were announced and before we had that decline. So I've been holding on to those for quite a while. Now all 4 will be profitable, but we're only going to sell 1 because we only have 1 trigger that's been activated. The second trigger would be when price falls below this. The 3rd trigger is when the fast moving average crosses either up or down, but in this case selling would be crossing over and down below the slow moving average. So those are 3 of my very specific triggers that I am hard at following. So we're going to sell one, and the current price is $533.35. Oh, $533.40 now. All right. Price is moving quickly. All right, so we've got that one sold. All right, the next one is RCL. We have Royal Caribbean Cruise Line. And they've had a great run. We've been significantly profitable with this particular stock. We bought 4 shares back here at $237, and we only have 1 left. We've already sold the 3 previous here, each one of those for a profit. So let's go ahead and go into our active trader and sell that last one. And there we go. So we have over $400 that we've made on the Royal Caribbean shares. So I also want to show you, we're going to go into a larger time frame here, and we're just going to go into 1 whole year. All right, and I want to show you the RSI, the relative strength index. Right now we have a very large downfall. We've got a drop in share value, and many times if we go back here and we look, when the RSI hits the bottom of the range, sometimes like right here we are at the bottom, some traders will use that as a hard rule that they'll buy in here and they'll sell at some point, possibly when price reaches the top of the range they might sell, or they'll have another trigger that they'll use to let them know that it's time to sell. And they'll wait until the RSI comes back down. And you can see if we follow this back up, we had a down point here, and maybe they followed it back up and they sold when price action hit the slow moving average. And then we go back down to the RSI, to the bottom value. And you can see we're down here and price could move up. So it's quite possible that later today or tomorrow, or excuse me, Monday or Tuesday, this might fall all the way back down to the bottom of the range, and some traders will buy in. I don't always, I'll use the RSI sometimes depending on how the price is moving and then how the news is. And I've been successful with that. So if you look, if we hit the bottom of the range, shortly thereafter we have a cross, and we hit the bottom of the range, shortly thereafter we almost have a cross. So if I had bought in here and I waited until the cross to buy even more, I would have actually lost on this particular purchase because I would have been holding it for some period of time. I don't have a hard rule of when I sell right now if I were to buy from the RSI. But if we go here, we look here, price finally, it did cross there. So it's quite possible that it may happen again here. There are thousands, if not hundreds of thousands of traders out there that they strictly only use the RSI to trade, and they're extremely profitable. I only use the RSI at this point as just another indicator that offers me information along with the MACD to make my trading decisions. If you're getting into trading, you can do some research and you'll find that there are many times when RSI reaches the bottom range, it could stay down here for days, weeks, or even months. Just like here, we're looking at, this would be considered, so down here is considered oversold. And up here, when it crosses the top of the range, this is considered overbought. And a lot of traders would be selling right around this point here. But you can see that this is on October 8th, but it kept going for over 2 more months. So there's lost value that anybody who's strictly trading off the RSI, they've lost. Additional profits. They lost additional profits because they might have sold a little too soon. So all these are what I use to make my decisions. At this point, we'll go back to our 3-month, 1-day chart. If you're new to these videos and this is your first video, the 1-day chart is each candle represents 1 entire day of trading activity. So we've sold Royal Caribbean's. Next one is Shopify, but I know all the shares I currently have are higher than the current price. So the next one that we'll take a look at is another ETF, SMH, which is VanEck Semiconductor. Now I currently have 8 shares and that's maxed out. I buy in blocks of 2. Yesterday, the trigger was activated by price dropping down, and we certainly have a continuation. We have price opened up at 282 from 289, so it dropped $7 lower. But this candlestick pattern is a long leg doji, and what that is we have price at the open moved pretty sporadically in both directions from the open, with price right now being near the open. So a long leg doji is we have price at the open, we have current price or closing price with long leg wicks on both sides, and they're about equal distance. And what this represents is indecision by the traders. The bears and the bulls are pretty much fighting it out, trying to figure out which way the price is going to go. Here, very clear. Here, price is very clear. Here, it's very clear. Now, when we end up with something like this, this is a hammer. We had price fall pretty drastically, and then it came right back up, and then we had a continuation of price movement the next day. For day traders, candlestick patterns are very important. I don't use any candlestick patterns to make my decisions. Well, I just did here. Where we are not going to sell because of this candlestick pattern. We have continuation of price falling, but we have an indecision in the market right now. For example, traders, day traders, and people who use the candlesticks more are actual day traders. They look for patterns in the candle. So if we look back just using this chart alone, where we see price move down and go back up, they believe price the next day will go back up and continue in that direction. It did not happen here. We have an indecision. Well, this would be an indecision. So if we look for another candle with a leg, and then price rose back up, it did continue the next day. Did that here as well. We have another indecision, and price opened higher the following day. Here we have, this is a hammer. There are multiple types of hammers in here. This is a hammer, and price did continue up. I do not have enough trust. Yeah, trust would be. I do not have enough trust in the candlestick patterns yet, or my knowledge of patterns. So right now I'll just continue to stick with my swing trading strategy. Definitely, trading is definitely not a tragedy for me. And if you choose to follow me, it may not be a tragedy for you. If it is a tragedy at this point, start watching my videos. Please share my videos. And over time, we'll all make we'll make some profits and make our each individual lives a little less tragedy, or have a little less tragedy in our lives. Anyways, we'll just go on to the next one. The next one is SPXL, which is, oh, wrong one. That didn't take. SPXL. Enter. There we go. That one took. Now, SPXL, like the SPY, is an index to the S&P 500. However, this one is 3 times, meaning with each value or dollar increase, the actual share that I will take profits on is 3 times the actual move, which is great for me as a long-term upward trend trader, because I get the value of all of the stocks on the rise. The negative to doing this is called a leveraged account. The negative is I also have 3 times the losses. So again, the difference between this particular index of SPXL compared to the SPY is this is a leverage. So it's 3 times leverage over a regular SPY. And since my trading activity is mostly longs, I'll take advantage of having the SPXL over the individual SPY account, because I'm making 3 times the amount of money. Now, currently, we're maxed out at 12. Now, unlike the SMH, we have a trigger yesterday. We have continuation of price moving down, but we definitely have price moving down. And there's no indecision here. Now, the reason there might be indecision in the SMH index or ETF is because that is a single stock, if you will, where the SPXL is an index of the S&P 500, which is 500 stocks. So this is the average price, and price right now is going down for the average of those 500 stocks. So where it's quite possible that Monday can roll around and SMH will still be going up with the S&P 500 stocks going down. So we're going to sell. I buy in blocks of 4. We're going to sell 3 right now. And that actually that sold at 174.73, and I made a $12 profit on each share, so that's $36 off of that particular trade. Next on the list is Taiwan Semiconductor, which is TSM. We have 8 shares. I'm maxed out there, buying blocks of 2. And you can see that this chart is very similar to many of the other charts that we've already looked at today. We did have price trigger as it crossed yesterday. We have continuation down. So I'm going to sell 2 shares at 234.40. We'll price it at 234.43. And there we go. That took. So I sold, by my accounting, 234.33. And I say by my accounting because right now my accounting method as through Charles Schwab is last in, first out, meaning that by their accounting, they're going to show that I sold 2 shares at 234 that I purchased for 240. So I'm going to show a loss of, we'll just say $6. They're going to show a loss of $6, where by my accounting, I'm actually selling here. I'm selling at not even selling that. I'm selling the 218 shares. So for my accounting purposes, I will have a $16 profit. Again, when price falls below my purchase price, I do not sell. I hold on to those until price eventually rises back past. And with Taiwan Semiconductor being the largest chip manufacturer in the world, it won't be long before price rises back up and we make a profit off of that. If you've not heard of Taiwan Semiconductor, you've certainly more than likely heard of NVIDIA or NVIDIA, whichever you prefer. Taiwan Semiconductor actually makes their chips. They are the manufacturer of almost all of the chips that are being made around the world today. So again, Charles Schwab is going to show a $7 loss on my realized gain, but I actually have a gain of $16. So with that, our next stock is Twilio, TWLO. I have 8 shares. I am maxed out on that, buying blocks of 2. Right, now when I created my list price, Twilio was higher than my last purchase price. It's now lower than all of my purchase prices. I will do one sell order just in case you're watching this video for the first time and you haven't seen a sell order. So what a sell order is, since I do not want to sell anything at a loss right now, we will make a sell order. We'll come in here, right click, hit my sell button. This pulls up an order ticket. And Twilio, since I buy in blocks of 2, we are going to sell 2. Current price is $120.99, and my last purchase, or the lowest cost, is $122.32. And since my last purchase price was $122.32, I use the first digit. I take 10% of that, which would, in this case, it would be a 10, and I add 10 cents to the overall price. So instead of $122.32, my sell order will be $122.42. And this is good till canceled. And this is also active in extended hours. I want to confirm and send. So there's our sell order for 2. And it's quite possible that price may continue to fall, but we might have a spike up before it falls again and continues down. If it doesn't happen today, it's quite possible that Monday, extended hours, price can reach our sell order and trigger that before it falls again. In any case, if it does sell, we've got a 10-cent profit, but more importantly, I have that money available to put towards another stock that actually is in an upward trend. Now, under my rule set, looking at this chart, you'll see that price triggered a sell alert 3 days prior. But the following day, since I look for a continuation, I just don't sell right because of a trigger was activated. I wait to confirm in price. And since 2 days ago, price actually was going back up, I chose not to sell. But then the next day, we had price open up and then just fell the rest of the day. And one of the reasons I didn't sell here, even though we do have a continuation from this trigger, I would have sold here yesterday, but I had to leave for the afternoon and I came back late, so I did not go back. The only stocks that I checked were the stocks that triggered alerts yesterday. I did not check the previous day, which is part of my normal routine. But since I was late and I just wanted to get through yesterday's video, I missed this opportunity to make roughly $6 in profit. So I would have sold somewhere around here at 128. Here's 122. So I would have made $12 yesterday had I stuck to my regular procedure, but I did not. So at any rate, for those of you, if this is your first time, you saw the basics of a sell order. So we're going to move over to XLI, which is an ETF. And that is ETF for industrials. Now, industrials are going to be impacted due to the tariffs that were announced last night that Trump is placing on Canada and other countries around the world. We do get some materials for manufacturing purposes from Canada. And I currently have 3 shares. I max out at 4, so we're going to be selling 1. And so far, the 3 remaining shares, if I were to sell them all, they would all be sold at a profit. We do have a continuation of price moving down from this continual run. So we're going to sell 1 at 149.75 if it takes, and it did. So our next stock is XTL. Oh, wait a minute. Okay, I just looked up at my wall and I saw, now we have 1 stock I did not record on my wall. We do have one that we purchased at a greater price than the current existing price. So currently 1 share now is we would be selling at a profit. Okay, so at any rate, we've got XTL. Now, just like Twilio, we had price actually activate. It was triggered 3 days ago. However, we had price move back up, so I chose not to sell. And then we had price fall back down and cross the fast-moving average again. So I would have sold here yesterday. Fortunately, we purchased XTL at $120 for 2 shares, but I'm also holding 4 shares again from a prior purchase way back before February, before Trump announced his tariffs, which precipitated a very rapid decline. So we are in another situation where Schwab will show that I have a loss. They're going to register that I sold these 2 shares, so they're going to register a $3 loss, which by our books it would be a $6 loss, but I'm actually selling 2 shares that I purchased at 110.52. So that is a $7. Let's drop that down. Price fell. Let's drop it down to 117.23. So from 110 to 117, that's 7. So, and we're going to have an actual $14 gain. Where Schwab, when we looked at our realized earnings, will show a $6 loss. All right, we have one more stock on the list that we actually are going to more than likely sell, and this is Yalla. Whoop, that one did not go. Let's just come down here and click there. All right, we have Yalla, and we purchased 100 at 679. We sold 25 after our trigger, and then we bought back in. And just very similar to the previous 2 of the previous charts, we had price fall, but we did not have a continuation. We had a rise back up. But for today, we do have a fall. We have a continuation of price falling below the fast moving line. So we will be selling. I'm maxed out at 100. I buy these in blocks of 25. So we'll be selling 25 of them. And there's 25. And we're selling, well, hopefully that'll go at 752. And 752, again, they're going to register a loss. But my accounting purposes, I'm taking it from the 679. So we will just call that $1. So that'll be a $25 profit compared to a roughly 20 cent per share, which would be $5 loss. So that's the difference in accounting from the last in, first out from Schwab to my accounting purposes of not selling the very last stock in which we purchased. All right, well, that's it for all of the stocks that hit our triggers that we had to sell or create sell orders for. We are almost through today's video. Before we finish, could you please hit that like, share, and subscribe button? That way I might be able to get in front of more eyeballs. We have a very short list on our buy list today. We've got one stock that hit our buy trigger, so we will go take a look at that stock now. And that stock is Verizon. So if we look at Verizon, they crossed 4 days ago. Actually, with a confirmation 3 days ago. And even though the market went down most of the day, most stocks did not gap up. Most stocks gapped down. This stock gapped up, which is pretty strong. So we also have a MACD that's going upward. And we also have an RSI that's going up. This fast moving average crossed the midline, which by itself is not truly a great indicator. So we will go into our 1 year, 1 day chart. And we're going to expand out a little further. We're going to go into a 3 year and a week. So that's kind of low there. All right, so we have price that actually is below the slow moving line on the weekly chart. So we will go ahead and just pass on the Verizon, even though that did hit our sell trigger on the daily chart. But we'll leave it alone. Since the market seems to be going down, we just will save our money until Monday. And if we end up with a green candle, we'll go ahead and buy it. All right, so that is all of our sales and our not purchases for this Friday. All right, so we will pull up our earnings for the day and the week, see how we did. And here we go. So for today, we show that we have a realized gains of 153, but it's closer to $200. As I was explaining in the video, the way the accounting works with Schwab is different from how my accounting is. I do not sell. I very rarely sell any stocks at a loss. I will hold them until we're able to sell them at a profit. So for the week, we're looking at, we'll just call it $1,400. And again, even though this is showing a loss, we did not lose $177 this week, so it's probably closer to $1,600 or $1,700 for the week. Now, for our portfolio balance, we have a 14.73% compared to the S&P 500 of 8.59%. So we are steadily making money, just a little bit here and there, every day. All right, so closing these, I believe the last thing we need to show you is the sell list. We sold QQQ, RCL, Royal Caribbean, SPXL, Taiwan Semiconductor, XLI, XTL, and Yala. And then I, outside of the video, put sell orders for stocks for Apple, Keys, Eli Lilly, Twilio, UDAL, and XLF. And that's it for today, and that's it for this week. Another video done, and if you've made it to the end of this video, I'd like to thank you very much for your time. Every second you watch, I hope I'm giving you some information that is helpful and useful. Have an awesome and great weekend.